Hello everybody, welcome back to Financial Trading Basics Part 26, Momentum Hangovers. Continuing a lot of the discussion we're talking about, again mainly last episode, or last several episodes, we've been emphasizing that again the most predominant thing to change is investor maturity. Supply chains will continue changing, they'll consolidate some, but they'll continue changing. No matter how good at science you are, how good your business is, there's always going to be inefficiencies. The state of inefficiency is way higher, so that's where profitability, that's where businesses come from. We've talked about that, but I just want to compare momentum trades, use the analogy of a hangover. And really that's kind of how the investor maturity landscape will change. Right? A bunch of people in college go out drinking. They're just going to go out and drink as hard as they can, they're going to rage out, they're going to black out, and it's just going to be a total fucking shit show. Bunch of, 40, 50-year-olds go out, or anyone past like 25, you're going to go have a couple beers and have some conversation, right? The alcohol doesn't change, people still like to drink, people still like to socialize, but the extreme rage to the extreme, recovering for a day and a half, that's kind of what I liken a momentum trade to, right? Nobody, right? Throughout the week, everyone's boring, everyone's dumb, everyone's just sad as fuck, and then the weekend comes around, like, let's go. At the current time, people don't react to a stock price or any asset price until after the appreciation's happened, just because of the nature of market mechanics, and so. Again, it makes a lot more sense to take a company that you get pretty confident on the fundamentals. Another just big idea I want you to have in your head is I've said it many times, see it on NBC all the time. Fundamentals versus like expectation, or like a fundamental basis versus a momentum trade. What is fundamental? I'm going to make the point that it's just profit, but I would even make maybe more so like fundamental can be a lot of different things. It can be like fundamental innovation that can give your company a real edge. It can be fundamental management, or just limiting your inefficiencies, being a good operator. That could be fundamentals. So we're all in agreement that fundamentals are good for investing, or again investing versus trading is not a meaningful distinction to me. But I guess I've said it multiple times, but we ask the question, what is fundamental? Have that in the back of your mind. But then back to our hangover analogy, or you go from college kid to a more mature adult. Like I said, you still like to socialize, you still like to go out, you still like to trade and invest and make money. Your risk tolerance goes down a little bit, but moreover, to the overall investor maturity, it's going to, like I said, tighten up the momentum trades. You'll have probably the same type of strength on the appreciation. Well, I'd say it'll limit the appreciations and the retraces, or the crashes or dumps, or whatever you want to call them. Just because, again, whatever we mean by the word fundamental, the investor base is just going to be a lot more knowledgeable of that. They're not going to be, clickbait reacting to just whatever's moving. And now, just some quick, before we get to like valuing a company, right? I keep seeing like memes. Everyone on CNBC like meme stock as like a thing, as like a categorization of some sort of momentum trading. No, meme stocks don't exist, right? So GME, GameStop. You want to be in meme stock so you appreciate really fast. This or that. As a trader, as an investor, the instant I buy something, I want it to go fucking straight to the moon, past to Andromeda, past to fucking Kuiper Belt and all that other shit. But my point is meme stocks is not a meaningful. The reason people say meme stocks exist is because of the efficiency of technology, right? Cell phone, people can do real market research literally instantly. So the methodology, the technology has enabled the increased retail investors and the influence of them. But again, like whether that's on Reddit or whether that's over here or whether that's the the Wall Street Journal bet, or not the Wall Street Journal bet, but like the Wall Street Journal issuance in 1978, or this lounge club over here and people getting excited. The thing that's changed is the technology to transmit the momentum. not the actual mechanics. And meme stocks to me means literally nothing. And I'm gonna get 27, turning 28 next month. Really fully integrated into the internet since 6th, 7th grade. Let me make sure I'm still rolling. And so I just like to start out with that analogy. I said overall, that's what I think the investor, reaction to trading will be. Is it will just be tighter moves in the market, meaning the appreciations will be smaller. And let's just start with a definition. Again, this is super rough, but a momentum trade in a developed market like the U.S. stock market. Remember, I said that 95% consolidation. Anyone who wants to can have a broker. There's no real regulatory infringement, stuff like that. So I put a momentum trade at 1,000 to 10,000%. 100 like 10 to 100 times appreciation and about 10 or less trading sessions. So you have the GME. Let's just go through them. GME versus AMC versus Moderna. I don't have Moderna as a momentum trade. Talk about that as a fundamental trade. But right, you have the GME, you go from the $1, $2, $5 to the $300, and again, a couple of trading sessions. And the momentum appreciates in about 10 trading sessions. But again, I looked today what's GME 190, 160 to 200. So the appreciation, right, that's the hangover. The appreciation is really, really fucking fast, right? You drink for like 5-6 hours, or you crazy fucks for like the whole night. And then you have to recover for like a day and a half. The not analogy in the stock market is once the appreciation happens, most of the appreciation still sticks around for a good amount of time. That's been 7 months? So again, that's within a mature financial market. AMC, again, same type of deal. Now for AMC, I just wanted to ask the question, how do brand names, cash stores, and management affect a trade? Forget the CEO's name. Was on the CNBC the other day. Jim Cramer and Mike Santoli. I don't know if you guys noticed, but they have about $2 billion of cash on hand. That's the most they've ever had. But on a trading basis, AMC is a relevant example, but just in general, brand names have value for a trade. Again, like I said, I was in AMC. I did not hit the big appreciation because, again, zero fucking real cash flow. Still, because of crime, classic. But I think brand names have good value for, again, comeback trades, momentum trades, right? You just need one or two good pops. It doesn't, forgetting AMC, they just have some company get a little bit of stimulus, a news cycle something, and a brand name. Good chance for a little bit of appreciation. So I think that's good. Cash stores, obviously, if you can pivot and do something correctly with fundamental innovation, with increased efficiency, in terms of, again, putting on a trade, a real wild card, you'd need more variables, more direction on why you would enter the trade. But clearly you can buy this company, buy that company, hire these people, or you can just burn it all away too. So management, again, I'd say management's even more relevant than cash stores. If you have someone innovative, someone that can do something with it. But again, like I said, I think these are real factors, but they can go either or. It just really depends on the given trade. And then for Moderna, again, I put that in parentheses. I don't see that as momentum, as they clearly had fundamental business progressions, a lot more selling for the COVID vaccines. With maybe, again, not even commenting on the biology right now, but just maybe, a booster here or some sort of, maybe things in the future with the 10 other drugs, other mRNA vaccines. So this can go from, the COVID, the stimulus for Moderna to jump into the game, and then it genuinely just, right, because they've appreciated 700-800% in the past year. Clearly a very good trade, or could be a very good investment into the future. Again, trading, investing, not meaningful words, or differentiations, but that's just what I want to say there. Again, even getting away from momentum trade, just Moderna is a good example of something with genuine good business development. It can go one way, it can go the other. I have no real opinions on it. because of the fundamentals. So they can come out and let's say you don't need a booster, but then they come out with 3 more mRNA vaccines for these different diseases and they work really well. And then, whatever. So, and then if you're already a profitable company or you've already got a multi-billion-dollar market cap, or more important, profitability, then again, management, cash stores, and innovation, really more so than that. A bunch of managers, mid-level managers, we talked about those people. That's not necessarily going to drive your business to new highs, and even just like I say, you don't even have to be innovative. You just have to cut out bullshit, and that can happen with a management change. So all of that lead into, again, just clear evidence. And so now I just want to ask the question, we've asked the question, what is fundamental? But how do we value something? And for here, a company, right? It's worth what someone will pay for it. True. And my real emphasis here is again, as we've said, the consumer demand really it initiates a transaction, but the consumer tolerance, right? Just as someone that's I'll buy stuff for experience, right? Like my cell phone battery just started dying real fast, so that was it's like $1,000 to get a new cell phone. I had about $6,000 to $10,000 profit in my trading account just sitting there from, the NGBL trade, the Carnival Cruise trade. So it's that's a no-brainer for me as a consumer. I'm just going to go because of the functionality, and that scales up to companies. Companies are just more people. Or just ideas at scale or production at scale. So, like I said, the consumer tolerance really determines how we value something. Past that, can't give you great analysis, but then I'm confident that the way we value a company, or when you say cash flow, you mean profitability, the end. And I said that over email, but not revenue, right? People would say, distinct right now in economic discussion, revenue is cash flow. And as a business operator, I like to see dollar bills being exchanged, but cash flow, economically, logically consistent, is profit. The value of a company should be profit, right? Literally, that's just the definition we presented. The amount of experience consumers are willing to spend over the cost of labor, goods, overhead, blah, blah, blah. So I think that's a good discussion for today. And just again reflecting, and just to be clear, I messed up EBITDA, what that stands for. It's earnings before interest, taxes, depreciation, and amortization. So just going through that, again, earnings, that is profit, literally. Again, not going to do the math right now. Before interest, again, a loan, interest rates, taxes, paid to the government, depreciation, less the value of a given object over time, and amortization. Amortization is paying down the debt. Depreciation is the part that I missed before, just wear and tear on your stuff. Let me make sure I'm still rolling. I got some other stuff I want to talk about. Might redo the whiteboard. Might just read it off my notes. So if you're just listening, I did not redo the whiteboard, so there's nothing new up there. I'm just reading off some of my notes. Right, another distinction we make on CNBC, or just an economic discussion, is growth versus value, and we've just discussed how to value something. So right, just growth something. Like how would you have any sort of leeway of what's going to grow versus what is a value? Again, when they say value, they mean a PE ratio of a sector, of a company doing about the same thing, making electric batteries or doing this or doing that, and there's 10 other companies, and this one's trading at a 5 times multiple, and everything else is trading at a 15 times multiple. To me, that is indicative of literally nothing. That's indicative of underdeveloped emotional maturity. Like I said, that part will tighten as well. Again, because it's just like I said, again, I've been a young trader. Again, I don't consider myself an old trader, but I came into the game with a fuck ton of discipline, and like you just again every stock, but I just see it. I've never seen somebody like again this crypto, this EV, this thing's going up, so this one's also going to go up, and it's really that becomes an assessment of the fundamental innovation, right? You still have to build the fucking business. You still have to get to profitability. And so, right, we have a lot of superhero movies. I think we'll have a lot more romantic comedy movies and just more like regular normal shit as opposed to we're the greatest, we're the best. Let's go raging out with our friends. Like, let's just have a normal fucking day and do the same thing tomorrow. So, what was I saying? Oh, growth versus value. How will investor maturity affect PE, growth versus value, if at all? Now, with that being said, I don't know necessarily, again, how much. Again, the same logic would apply if everything went from 15, 17, 30 forward earnings, whatever they are, to book value, cash value, profit value versus 5 times cash value. The value stock would still be the one that's lower. But again, growth is tied to fundamental innovation, and value as a distinct differentiation for putting on a trade or assessing economics to me means literally fucking nothing. I've already talked about, again, the momentum hangover. I think, again, like the appreciations will be less and the depreciations will be less severe, all more in accordance with the fundamental book value tied to the innovation. But just talking last kind of thing, NSF commentary reflects sentiment, not necessarily market mechanics. With an underdeveloped investor maturity, again, you see just anybody on CNBC, they have to have a job, right? They comment on the market every single day, but the innovation really drives the price movements, or really drives the ability to build a business. And with the underdeveloped maturity, they're just, again, trailing indicators. We've talked about that a bunch. Last thing is really just the consumer price index, right? Just what does a gallon of milk cost today versus 1970 up to just what's the value of a dollar? How much buying power does it have? And we've differentiated dilution and inflation. Inflation being is extreme depreciation of spendable monetary power against the currency backdrop within intra-currency market, and dilution, the consumer price index reflects dilution, just the overall spending power of something. So with this discussion today, do I want to say anything more about inflation or dilution? Again, I'm just confident that every time they say inflation or dilution on CNBC, they're referring to decreased spending power, which really does not matter, or at least there's not nearly enough fucking data, or there's nobody that has analyzed the data in any confident way and said, here's why, printing money increases dilution, but here's why dilution's bad for 10 years, 5 years, 30 years. Again, we could literally, if human sentiment, everyone was happy and healthy, we could go to no dollars and no one would rob anybody, no one would care at all. Not even kind of practical at all. But the extreme is the currency is not reflective of, money doesn't buy happiness. And so economically, dilution, I would say a very, very minor bad thing. Like drinking cyanide will kill you. Drinking 3 glasses of water, drinking no water will kill you. Drinking 6 glasses of water instead of 5 glasses, or 7 glasses instead of 5 glasses is not a big fucking difference. Dilution and any sort of money printing to me at current time has no real economic impact. It's really consumer sentiment. And that's more economics. That's what I wanted to talk about for trading today, and how investor maturity and momentum trades will change in the future. Thank you for watching Financial Trading Basics Part 26.